Hi, everyone. Thank you so much for joining. I'm Anya Butov, Chief Revenue Officer of Beacon Platform, and I'm joined today by Mark Higgins, Beacon's co-founder and COO. Beacon is a cloud-native trading and risk platform, and it's also an app development platform that's optimized for capital markets. We're the only vendor who gives developer tools and transparent source code to our clients, and we'll show you the power of that today as well. So I'll turn it over to Mark in just a second to give you an introduction to Beacon, the company, and then Mark will lead a demo of the Beacon platform. So in today's session, which is going to last about 30 minutes, we're going to demo some trading and risk applications that are geared toward business users. And then we'll give you a very quick flavor of the power of our development platform and show you how Beacon can be a flexible developer platform as well. At the end, we'll go over a few frequently asked questions. And if at any point during the webinar you have a question, please submit it using the question tab in your webinar menu panel, which tends to be on the right-hand side of your screen. So thank you again for joining. I hope everybody is staying healthy. Really appreciate you all taking the time during such busy markets. And I will turn it over to Mark.
Great, thanks, Anya. So I thought I'd start by giving a little flavor of what our company does and who we are and kind of where we come from to give a little bit of context. So it was founded 6 years ago by myself and a friend of mine, Kirat Singh. Kirat's a developer and I'm a quant. And we started our careers on Wall Street at Goldman in the late 90s. And Goldman was pretty unique in the time in that they have this in-house system called SecDB. And SecDB kind of has two parts. One part is a rich set of trading and risk management applications. And the other part is this underlying platform in which those applications are built. And that platform kind of spans all the different businesses at Goldman. And what it really allows you to do is for the typical kind of developer who works closely with the front office, so quants, data scientists, financial engineers, front office developers, people like that, it gives them a set of enterprise technology tools that lets them build stuff for the business in a really kind of nimble and iterative way that works really well in a trading environment, but also do it in a way that's kind of scalable and maintainable and satisfies all the technology controls that your institution has. So that was the kind of environment that we grew up in. In 2006, Kirat and I moved together to JP Morgan and started Athena, which is kind of version 2 of this thing. We built it all from scratch, kind of updated all the technology, improved some of the stuff that in hindsight we realized we did suboptimally in SecDB, and spent 4 years deploying that to a bunch of businesses at JP. And then in 2010, Kirat went to Bank of America and started Quartz, which is like version 3 of this thing. And again, spent 4 years deploying it out to thousands of different developers and end users there. Then in 2014, Kirat and I started Beacon as a way of building kind of a vendor version of this thing. So Beacon has two parts. One is our suite of trading and risk management applications, and the other is the underlying platform that we built that in. So Beacon, unlike a lot of other vendor solutions, isn't kind of a black box. It's a totally open box. We give our clients all of our source code. We give them all the developer tools that we use to build stuff. And then our clients can take that and customize and extend it and build their own stuff on top of it. I think one of the advantages that we have as a group of people is that we have a lot of long experience working on trading desks as quants, technologists. I was a market maker for a while. We've lived through periods of market volatility, through financial crises. We've seen a lot of trading and risk systems, both vendor systems, in-house technology, and more ad hoc solutions like spreadsheets. And one important lesson we've learned from all of that is how important it is to have a risk system that's both powerful but also flexible, especially in market conditions like today. You really need to be able to go in there and make fixes and changes quickly, but do it in a way that's controlled and scalable as well, so you can continue to meet your regulatory controls and institutional constraints. The problem that we're going to try and touch on today as we go through the demo is how to do real-time risk the right way. Many trading demos really struggle to manage intraday risk because they rely on either vendor systems, which are kind of black boxes, so hard to change, or ad hoc solutions like spreadsheets or some combination of those two. And when things go really crazy, like in today's markets, it's often hard to kind of keep that whole machine up and running efficiently. So with Beacon, what we try and do is give a solution that gives Robust real-time pricing and risk lets you build custom scenario analyses, understand your positions in detail, explain P&L the way that makes sense for your book, while also being able to change the system, often intraday, to add new ways of thinking about risk, new ways of explaining P&L, build custom scenarios that match what's happening in the market. And deal quickly and robustly with like real problems that happen. I remember in the credit crisis, there's real problems in the FX markets where exotics models just failed to calibrate because implied volatility skews were so extreme. And what that meant was the traders didn't have any risk reports running because everything just kind of broke. With a system like Beacon, it means your quants can get in there, make fixes to the model in real time, and get your machine back up and running so that you have proper intraday risk in these fast-moving markets. So with that, we're going to move over to a demo of the product. So we'll show some of our applications as well as a quick glimpse into some of the underlying platform tools. So the first application I wanted to show is our quote tool application. So this is a tool for structuring portfolios of derivatives and securities, pricing them in real time, running risk on them, analyzing them, and that sort of stuff. Beacon's a cross-asset platform, so we've got support for a lot of different asset classes. I'll just start with an FX exotic derivative called a volatility swap as an example here. So we've got, a column that shows the position for this volatility swap, and you can have multiple columns for lots of different instruments that you want to have in your position. And you can see analytics around each one. So for example, for the volatility swap, here's the fair strike for this thing. If I change the tenor, it'll go and recalculate stuff. And over here, it'll show market data. So you can go and see, for example, the FX implied volatility surface for the assets that you care about here. You can see implied vol by strike, term structure volatility, and things like that. We make it really easy in Beacon to extend our platform. So if there's a type of derivative that you want to trade that we don't support out of the box, then it's really easy for your financial engineers in our development environment to go and build a brand new instrument. It's all kind of like Python code, and so it's easy for most engineers to deal with. And then you can just kind of tag fields and say, I want this one to show up in Quote Tool, and then it shows up, and you get full access to all the different things that we have in here. And that's really a reflection of kind of our fundamental philosophy in Beacon, is this kind of buy and build on top philosophy, where you got a lot of functionality out of the box, but it's also designed for you to be able to extend and customize it yourself. So it's really not a black box. The next application I wanted to show is our real-time risk tool. So this is a dashboard where a trader or portfolio manager that's managing a dynamic portfolio can kind of see their risk and P&L through the day, and it's really customizable. So I've got an example here. This is running on this book, MGH Skew here, which is running a short skew position in Russell equity index options. So for this particular book, I designed a dashboard set up just the way I want it for this thing. So at the top is a risk report that shows me my headline risk, delta, gamma, vega, and theta. It's a pivot table, so I can go and drill in and see down to the individual position level what's going on in here. This whole thing is updating as market data change and as new trades come in. I've got a P&L explain report. Now, for this particular book, because it's running a short skew position where it like sells a 25 delta put option and buys a 75 delta put option, for that particular book, it's exposed to cross gamma between moves in the equity index price and moves in volatility. So I want to see that broken out in my P&L explain report, and so here it is. In general, this shows me my total P&L from new trades, marked at the time the trade was done, time P&L, so broken out into theta, which is the thing that offsets gamma, and carry, P&L from moves in spot, moves in volatility, that cross gamma that I was talking about, and then skew P&L. So it really lets me design P&L explain in a way that makes sense for my book and put it together so it's kind of ticking in real time. We also have market data viewers in here. So for example, I can, it's detected that I've got positions on Russell 8th of May expiration, and so I can go and double click on that and look at what's happening in that market. So the orange pluses there are implied vols by strike that we pulled from real-time market data. There's a blue line that's a little bit hard to see there that runs underneath the orange one, which is our fitted implied volatility model. That's what we run all our pricing and risk calculations against. Another interesting one is there's a green line there that's the rolled volatility. That's our prediction for where implied volatility has moved to based on last night's closing volatility and the move in the underlying index price. And so that model for how implied volatility moves as spot moves around, that feeds into all of our risk calculations as well. And that's also something that's customizable. And then I have a couple kind of scenario risk reports built into this dashboard, so I can understand what's happening to my portfolio as the market moves around. So this equity risk ladder here in the 0% column, I've got my my headline risks at the current market. And then I can see what happens to my risk position under different shifts to the equity price. And then a similar kind of ladder here that shows the same thing for different kinds of implied volatility moves. So that's the real-time risk application, and you know, one of our main applications that traders use to kind of monitor their risk through the day. Now I'm going to jump back to Quote Tool, and I'm going to walk through an example of a pretty standard operation, which is rolling some options. I'm going to roll some strikes in that same MGA SKU book. And I'm going to take the existing position. Let's jump back to the real-time risk for a second, so you can see I've got a 1205 945 spread here. It's a put spread on 8th of May expiration. So I want to trade out of that spread and trade into a new one. 1205. Let me reset market data here. And now I'm pulling in real-time market data. That's the same as what's being used in that real-time risk system. So here I'm going to set up my my option spread, which I can do really nice and quick. So now I've got a thing where I'm selling the 1205 and buying the 945 to close out of my existing position. I'm going to now roll into something. So I want to roll into, say, like an 80 delta versus 20 delta position. So to use that, I'm going to use some of our solver functionality. So all these fields here that are in yellow, those are calculated fields, like the unit premium and the Black-Scholes delta, that's like a sticky strike delta, the risk delta, that's the one that uses that model for how vols move at spot that I was talking about, position delta and vega and stuff. But if I overtype one of these fields, it'll solve for something to match what I typed in, and what it solves for is defined by here down at the bottom. So it's going to solve for the strike, and so if I want to make it, say, like an 80 delta put, I'm going to type minus 80 into that, and it solved for the strikes here. I'm going to move to the closest listed strike to make it something I can actually trade. Then I'll clone it again, and I'm going to say, okay, I want like a minus 20 delta there, so like a 920 strike. And I'm going to enter into a position where I'm long the 1230, short the 920. And so now I can see kind of headline what this will do to my position. It'll make me shorter 220 delta. It'll make me shorter 181 vega as well. So that kind of gives me some headline risk, but I can also go and run, you know, full scenario risk reports on this position in Quote Tool as well. So here is the kind of scenario risk impact that I get from that position. So here in the 0% column, again, is kind of my headline risk change, and then under different shocks to the market, here's what would happen. I can also go in here and say, what would my book position look like if I were to do this? So if I, oops, sorry, I think that's what I was doing before. So I can go and run this and say, what will happen to the position of my portfolio? And then I can drill in and do things like say, what are all the positions by the risk positions by position? So I can come in here and see a pivot table breakdown of that. So here's my 1205 and my 945 strikes. Those are showing 0 because I rolled out of those options and rolled into these new ones, and then I can see the risk by position that way. So it's really easy to do that kind of slice and dice risk analysis using our risk tools. The next step, if I actually wanted to trade this, is I could go in here and say like, okay, I want to say pay 20 cents to enter into this position, say that's where I can execute it. And then Beacon isn't just a kind of a pre-trade analytics system, it's also a booking system. So from Quote Tool, I can go and say, go and book those, and now it'll appear in my positions. So the next application I'm going to jump to is our trade blotter. So trade blotter is an application where you can go and see for your actual portfolio what trades you've done. You can go and do operational stuff like amend trades or novate trades. You can manage life cycle events. You can run ad hoc risk reports. Any of that kind of stuff you can do from Trade Blotter. So you have like the real-time risk dashboard where you've got sort of a canned set of reports that's automatically updating through the day. But if you want to run other kinds of risk reports, you can go and do it from Trade Blotter as well. So for example, I'm just going to reset market data, so that's pulled in real-time market data using the same real-time market data sources we use in Quote Tool and the real-time risk tool. And for example, I can go in here and pull up one of the equity trades that I did there. And let's say I wanted to modify it. I want to do an amendment, and I'm going to amend it to add a fee. So say I want to add $100 broker fee onto this thing, so I can go and amend that deal, and now that's that amendment's been made. Beacon's deal model is a really powerful deal model that allows you to capture all that kind of operational and life cycle stuff. And for a given deal, basically what we have is sort of a chain of events. It's kind of like a blockchain, but without the crypto stuff. And so for example, for that deal, I can go and click this show events button, and it'll show me all the things that have happened to that deal. So here's the original open event where I got into it. And here's the fee event that I just did. I can click view position delta, and you can see here it's just saying the impact on my positions of adding that fee is to add in a minus 100 cash. We can also run risk reports from here, like I mentioned. So let's say I want to go and run that same equity risk ladder report that we saw from Quote Tool. I can go and run it on the portfolio from here. And again, it gives me that same pivot table view of my risk. So the last thing I wanted to touch on was how you go and modify stuff inside an environment like this. So what I've switched to now, this is our development environment. So this is the thing that sort of quants, financial engineers, data scientists, people like that would use. And I'm running this against my own personal development environment. So I've got a local copy of the source code that I can change and test and things like that doesn't affect production directly. So what I'm going to do in this example is look at a sort of common thing that people often want to do, which is customize stuff to add new fields in Quote Tool. So I'm going to consider an interest rate swaption. So first thing I'm going to do actually is I'm going to run Quote Tool from the development environment. So this is running against my my test code here. So Beacon has an application framework that makes it really easy to build applications like this without having to know JavaScript or HTML or any of that kind of stuff. You can just sort of script out a grid of widgets in Python, and like I just did there, hit F9 and it turns it into an application for you. So here I'm going to pull up an interest rate swaption. This by default runs against current data. In our demo environment, we don't have data for today, but fortunately in Beacon, I can go and access market data for any historical date that I like that I have in the system. So I'm going to go back to June 1st, 2018, when we did have some data. And so here's our interest rate swaption. You can see it's got the usual stuff. It's got an expiration date, underlying swap tenor, strike price, whether it's payer or receiver. And then we've got some other information here like the normal model volatility and the par rate. Now, the way interest rate swaptions are typically quoted is in implied volatility for at-the-money options as a function of expiration date and swap tenor. And out-of-the-money options are often quoted as vol spreads to the at-the-money volatility as a function of strike spread to the at-the-money strike. So one field I might want to add in here, which doesn't exist now, is kind of the spread of strike to the at-the-money par rate. So that doesn't exist right now. So I just want to walk through how you would add something like that. So let's go back to the developer environment here. And I'm going to switch to the script that defines the class for this interest rate swaption. So if I scroll down, here I've got, this is this Python code, and here's the method on that class that describes the forward. So this is the par rate of the underlying swap. It's got a couple decorators. So this first one, grommet.fn, Grommet is a dependency graph framework that we build all of our financial objects in. It's a little too detailed to get into on this demo, but it's a really powerful framework that undergirds a lot of how we do our calculations. This other decorator here, form field, this says, I want this thing to show up in quote tool. So that's all you have to do when you add something, is add this little form field decorator. It says, I want it to fall in the category of fields under market data and pricing, and I want it to show up with par rate like we saw. So if I want to add a new field, I want to add something that is the strike minus the forward, and I want it to be in basis points, say. A little doc string, strike minus the forward in basis points. And then I can add the calculation for it. So the strike minus the forward, and then I'm going to multiply it by 10,000 to make it in basis points. Now I haven't made this show up in quote tool yet, so I'm going to add a form field decorator on here. I'm going to make it say like strike minus forward, say. And it's in basis points, so I don't need this percent thing. I'll just have 1 decimal point, and make sure that this is tagged as a float so that it knows how to format it. So now if I go back into quote tool and run it, this is going to pop up the application. Again, this is just running in my development environment. So I haven't made any changes in production yet. This is just for me to do my testing. And so I'll go and test it out here and, again, switch back to the June 1st, 2018 market data that has some swaption data in this environment. And so now here's our new field, strike minus forward. It's just there. By default, it's 0. That's because the strike of the swaption defaults to the at the money par rate. But if I change this to 3.05 or something, then I can see here my strike minus forward spread is 11 basis points. So that kind of shows you how you'd go and make a little amendment to something. This gives you a flavor of how stuff works in quote tool. Like I said, this is all still just in my development environment though. So I haven't deployed this to production. No one can actually use this to do anything yet to make money for the business. The next step is to use, and we don't have time to walk through all of this, unfortunately, but in Beacon, in our developer tools, we have workflow tools for doing that software deployment stuff, SDLC stuff. And the idea there is to make it so that I can take this one little atomic change, package it up into a release candidate, and then the environment tells me which controls I need to satisfy, what sign-offs I need to get, what testing I need to do. And once I satisfy all those controls inside this environment using the workflow tools, once all those controls are satisfied, then I can deploy that change to production right away. So I've made a little atomic change. I can deploy it really quickly, but I can still do it in a way that satisfies all my institution's controls on how deployment works. And that's a really important part of the platform. It lets us do kind of nimble iterative development, unless our clients do that with their own businesses, nimble iterative development that's still designed to help people collaborate and build a shared code base and work within kind of modern enterprise technology controls. So that's all the stuff that we wanted to show in the demo. And so with that, I'm going to pass control back to Anya, where we'll talk through some of the frequently asked questions.
Thanks very much, Mark. And just as a reminder, if you have a question, please feel free to submit it using the webinar panel on the right-hand side of your screen, or you can always shoot us an email, info@beacon.io. So we'll go over a few FAQs. So one of the most common ones is people see a demo like what Mark just showed. They like what they see, but they already have a trading and risk system, or they already have some in-house analytics. So the question is, how would clients use Beacon if they already have something in place?
Yeah, that's one we get a lot. We do have some clients who use Beacon as their end-to-end trading and booking system. So plumbed into downstream systems like settlements and accounting systems, and into upstream systems like execution venues, and kind of use it for everything. We have other clients who already have a booking system in place and already have kind of nice, smooth operational flows running through that and don't want to replace that. but they still do want to use Beacon for its robust intraday risk and pricing stuff. So for that, what we do is we take Beacon, we do a one-time integration with your booking system so that you have a mirrored set of positions and data in Beacon. And then you can use that as the one enterprise environment to use our stuff out of the box, all of our trading and risk functionality, and also build your own custom stuff in a sort of scalable enterprise platform. We see a lot of people do that same kind of thing, but instead of using a real enterprise solution for that front office stuff, they use spreadsheets and ad hoc solutions like that, which are really good at solving kind of the problem that's right in front of you, but often end up like 3 years down the road where there's hundreds of these little things and you kind of get painted into a corner where it's really hard to maintain. So using Beacon for that gives you it's kind of an enterprise, unified enterprise environment for that flexible edge.
Thank you. So next question is a pretty simple one. People want to get up and running very quickly. So clients often want to know what comes out of the box with Beacon, which asset classes, data sources, models, what do we cover kind of right away?
Yeah, Beacon's a cross-asset system, so we have broad coverage across a lot of asset classes, FX, fixed income, energy and commodities, rate derivatives, credit. Our coverage includes kind of like representations of all the different instruments, different kinds of securities and derivatives, standard analytics like yield curve bootstrapping or vol interpolation, reference pricing models for all the different things that you can trade in it, P&L explain reports, risk reports, all that kind of stuff. We've also had a lot of clients extend the platform and add their own instruments, for example, alternatives, private equity investments, structured notes, things like that. Clients also have the flexibility to take our reference analytics, kind of like the underlying quant analytics, and unplug our stuff and plug their own quant libraries in. We make that really easy to do. When it comes to data, Beacon doesn't come with data out of the box, but we do come with integrations with most of the major third-party data vendors out of the box. And we've also had a lot of experience with clients who have their own in-house data warehouses and helping with integration to those.
Thank you. So last question. What are some client use cases? We've got people on the line today from all parts of the industry and the capital markets ecosystem. Could you walk us through a few common client use cases for how clients are using Beacon today?
Yeah, sure. So, we've got clients kind of across capital markets, banks, hedge funds, asset managers, commodity trading shops, life insurers, even technology companies who build on top of Beacon in an app store. Some specific examples, we've got an investment bank who's using Beacon as a quant platform to deliver analytics to their business. So they've implemented a cross-trading desk value at risk calculation as part of satisfying their FRTB obligations. And what they found, they were able to build that kind of stuff, those new tools, analytics, reports, they were able to build it in Beacon way faster than they were able to before. We have an asset manager whose portfolio managers started using Beacon's pricing and risk tools to manage their portfolio. And their engineers have since expanded their use cases to build a lot of new in-house functionality in their instance of Beacon. That's a pretty common use case for us where we come in and help a client solve one particular problem with our trading and risk solutions. Their developers start building stuff in it and then get really excited. And as new projects come up internally, they want to use Beacon to implement them. This because they find they're a lot more productive there. Last example, we have a life insurance client who used Beacon to parallelize some of the calculations they had to do to evaluate collateralized loan obligation deals, so pricing and scenario analysis and stuff like that. And they used the Beacon's cloud infrastructure to do that, reducing the time to evaluate one of these deals from 7 or 8 hours down to just a few minutes. And it only costs them like $5 an hour in elastic compute costs, and they only pay it while they're running those calculations. That's a pretty common case for us. Well, we help clients figure out how to get onto the cloud the right way. That is, use it as an elastic pool of software-defined infrastructure that automatically scales up when you need it and automatically scales down when you don't.
Thank you, Mark. So as promised, we're right at about 30 minutes. Want to thank everybody for submitting your questions. We'll get back to them right after the webinar. If you'd like to learn more about Beacon, or if you want to try it for yourself, just shoot us an email at info@beacon.io. And one final note, everyone who registered for this webinar will get a recording and a slide deck with a bit more information about Beacon. So again, thank you to everybody for joining. Stay healthy, and we hope we'll have an opportunity to meet you in person soon. Thanks, everybody. Bye-bye.